Hi, good afternoon. Welcome to the marketplace. Coming up this afternoon, offshore investors show confidence in Ghana's 2025 budget, easing pressure on Ghana's bonds in the city. Also coming up, Energy Minister John Junapo dismisses load shedding concerns and says power supply meets domestic and external demands.
We are not shedding load. Fete yina mankania no yenye kura manabro so kakra. Ama yedibiko Burkina, yedibiko Cote d'Ivoire, yedibiko Togo.
My name is Darryl Kwao. Thanks for joining us. Details coming up. All right, thanks for staying with us, everyone. We begin the bulletin with our exchange. Offshore investors holding Ghana's bonds and other financial instruments have begun responding positively to the country's 2025 budget. This shift comes after initial concerns had weighed on Ghana's bonds and exerted pressure on the city. Here's more in this report.
Was influenced by revelations in the 2025 budget. Ghana missed on most of the key targets under the IMF program, including the deficit and primary target. This is despite an earlier claim by the previous administration that they will record a surplus when it comes to some of these indicators. The development impacted badly on Ghana's Eurobond and other investment instruments held by these investors. Their action also brought some fresh pressure on the Ghana cedi. However, Joy Business understands that based on these engagements with investors, they have revised their stance on the 2025 budget. This is based on government's commitment to embark on programs aimed at checking spending and raising the required revenue. The Bank of Ghana has also given the firm assurance that it will continue to implement measures aimed at controlling.
All right, joining me for the exchange is Yawlate Partner Financial Advisory at Deloitte Ghana, who have done their own assessment of the 2025 budget. Thank you so much for joining us on the marketplace. Your thoughts on our lead story about positive reaction from offshore investors to the budget, now easing pressure on Ghana's bonds in the city. Is your assessment of the budget also positive?
Yeah, so thank you very much and good afternoon to you, your viewers and your listeners alike. So I think our assessment of the budget, we looked at the various indicators. Some of the macroeconomic indicators are, in our view, achievable, given the current trend that is we currently seeing. So for instance, GDP growth is expected to be at about 4%. Last year, 2024, GDP growth was over 5%. So if you're projecting to achieve about 4% growth, that is something that we think is not overly ambitious. If you ended the previous year at about 5.7 and you are projecting a GDP of 4%, you are actually tapering down. It's an achievable measure. Other indicators such as budget deficits, we expect to achieve a budget deficit of about 3.1%. whereas maybe the previous year we ended at a budget deficit of about 7.9%. And historically, given our trend, our budget deficit has been over 5% on average. And so targeting a 5%, 3.1% budget deficit when the historical average has been over 5% is quite an ambitious target. Same with the primary balance. Our primary balance in the last 2 years has been in the negative. We are targeting a positive primary balance of 1.5%. That also appears to some extent ambitious. But from the indication that we are getting from government is going to work with all the institutions that are concerned about this to ensure that we achieve this target. So it's a mixed bag of some targets that we believe are achievable, for instance, the GDP growth of 4%, and then some targets that we think will appear as overly ambitious if you look at the context in which we are operating. So it's a budget that provides some hope for businesses, especially if you look at it over and above the macroeconomic indicators, and you look at the taxation policy that has been introduced, tax reform that have been proposed, and tax measures and removal of some nuisance taxes government calls them. It provides some hope for businesses, but it's a mixed bag of some targets that we believe can be achievable and others that are only or overly ambitious to the extent that we have analyzed them.
Yeah, some have said that the good target for this year is underwhelming compared to what we saw at the end of the previous year. Your thoughts on that? Plus, the tax reforms were a major highlight of the budget presentation. What are your thoughts on the measures announced by the government? Do you think they'll be effective?
So I think, as I said before, if you look at the previous years, the trend has been that a lot of the indicators that went south, some indicators such as inflation, has been overly above what we have targeted historically. We have targeted a single-digit inflation, and in periods when inflation was over 30%, then it was a worrying trend. So currently we are targeting inflation at about 11% or thereabouts. So then it means we are getting closer to the single-digit target. But inflation, as we speak, is a little over 20%. So that is a target that we think it may be overly ambitious, looking at the 11.9% that we are targeting. But if you follow the trend, you've seen inflation tapering down in the last couple of months. And so if you're able to manage the key drivers of inflation, one of them being food inflation, and the second one being imported inflation, if you're able to manage these two key drivers, you should be able to achieve that. So on the tax reforms, maybe you pick one after the other. We look at some of the key tax policies that have been proposed by government and the impact on businesses. So there are two key ones that I'll mention here. So the growth and sustainability levy, which two things happen there. So the first one is the fact that the period, that's the what we call the sunset provision. It was supposed to have been ended this year, 2025. Government has extended it. So that means that government is still expecting some revenue in the next 3 years, from 2025 to 2028. So it was supposed to have ended this year. So the mining companies were looking forward to it, that they were not going to pay that 1% growth and sustainability levy. That has been extended. The second thing is that in addition to the extension, the rate has been increased from 1% to 3%. So companies operating the mining sector, particularly those who are not protected by stability clauses in their mining agreement, are going to suffer and are going to pay more taxes. So that's a concern that has been raised by government. The second part of the tax reforms are the removal of taxes, as we call tax policies that were previously introduced. The first one being the electronic transaction levy. We think it's a positive one, particularly in the fact that we are looking at a cashless society, and we realized the adverse consequence of that in the introduction of that tax, that affected cashless transactions and people that started going back to cash transactions, the removal of emissions levy, and then also the removal of other levies, such as what we will call some import levies, among others. We believe that the removal of these levies are good and they provide hope for businesses. The challenge we have, and what we've challenged government to look at, is that government is looking at getting some additional funds from the tax refund account. Historically, that's not an account that we've relied on, especially looking at our trend of refund. If you're exporting more, we are going to get more in the refund. But if you are not supporting our businesses to export their produce, then you may not get a lot in the refund account. So what we expect government to do is to put in the right policies to ensure that that refund account accumulates sufficient revenue to support the budget. Because the removal of these taxes is going to lead to a shortfall of about 5 billion per estimate, a little over 5 billion Ghana cedis. That $5 billion will have to make up from this tax refund account and other policies that have been introduced by government. The last bit is on the reform of our levies and taxes, VAT.
Right.
We've seen historically where we've said it's a composite. So the taxes plus other levies are together called the indirect taxes. You could claim so what we're saying is the VAT portion can be set off as input-output claim. But the other levies, you could not claim them. So what consumers or what businesses were doing were to transfer them to consumers. And that led to some form of inflation. So with government decoupling that and going back to the situation where we are going to see a reduction in the tax or indirect taxes, it's going to have positive impact on inflation. And that means that government target of achieving about 11.9 inflation by the end of the year will be achievable if this has positive impact on taxes. There are other reforms that government has proposed, but they are yet to implement them, particularly the general tax and VAT reforms and import duty reforms. Government says they should be given some time for a couple of months or about 6 months for them to implement that. The business community is looking up to that, and they're expecting that to happen as soon as possible.
Right. I want to move away from taxes and talk about our debt situation. At Deloitte Ghana, you held a post-budget forum yesterday where the presidential advisor on the economy, Cedi, spoke. The headline there, he says, resuming domestic bond issuance and returning to the international capital market, those are inevitable. Do you agree with him, and what are the long-term effects on the economy?
So I'll comment on that and look at overall government debt management strategy. So this is all part of government debt management strategy going forward per the budget statement that was released. So government intends to go to the domestic bond market, and what they intend to do is to achieve two purposes, is to have a situation where external bondholders will invest on the local market, and we will have the benefit of not only domestic investors, but even international investors. Because there were times in past that we have non-resident Ghanaians who have invested on our local market, significant investment. But at the time that they decided to exit, we had a challenge. Our local currency depreciated significantly because we had not built enough buffer in forex or in foreign currency in our sinking fund to pay them when they decided to exit. So what government has said, to manage that risk that we suffered historically, government is going to fund the sinking fund account with some forex or sufficient forex, that as we are seeing investment from these foreign or non-resident investors, they are going to invest the forex equivalent. And when they are exiting, they will be exiting with foreign currency. Government is going to build enough buffer in the sinking fund. So at the time that these investors decide to exit, you will have enough funds to pay them without affecting the local currency's performance. Historically, when these non-resident Ghanaians or non-resident investors were exiting, our local currency depreciated significantly because we had to pay more by converting our local currency to pay them at the time in foreign currency. So government says they will mitigate that risk by building sufficient buffers in our sinking fund in foreign currency to repay them should they exit the market. So that's a positive thing. And that has actually sent the right signals to the international community. When we suspended repayment of our debt, our external debt, both interest and principal, that sent a negative signal to the international community. So this is a positive signal. And as we are seeing international or non-resident investors coming to our market, that's a positive signal. And it's going to have positive impact on our local currency and also our debt profile.
Yeah, I mean, the Cedi depreciation was a major issue for us, challenge for us in the previous year, as well as inflation. Let's see how that works out. My final question to you may be, what else in the budget you thought was worth talking about or worth highlighting, plus whether or not the budget fits the government's agenda of resetting the economy?
Yes, overall, I think beyond the tax policies and the debt management strategy, we also have flagship programs that government intends to introduce. So some of the areas that we have advised government on, or we've cautioned government on, is that these are very good programs. For instance, the big push to support investments in various sectors, strategic sectors, the 24-hour economy, other social interventions like free sanitary pad, and local industrialization support and Mahama cares are all good. What we've advised government to do are two things. The first one is to have a properly thought out financing for these programs. We do not want them to be debt burden. Otherwise, our targets of 3.1% budget deficit, you will not be able to achieve them if you continue to finance these social support programs. They are recurrent expenditure. They turn out to be recurrent expenditure. And if you finance them from your budget and you do not get enough way to get returns from them, your budget deficit will widen as opposed to reduce. The second one is to leverage on existing institutions who have the expertise to help drive these programs. So we should not duplicate functions. So where there is an industrialization program like the DEATH program that is looking at supporting industrialization, we should ride on skills and experience of the Ministry of Trade, the Ghana Enterprise Support Agency, rather than establishing a secretariat at the presidency or somewhere else, because that is an additional cost that you are building, and it's going to take a gestation period for people that you have employed to start even to hit the ground running. So we should use existing institutions to do. Same thing with Mahama Cares. The National Health Insurance Scheme can drive the Mahama Cares. Same with all the other policies. Women's Bank, we should ride on whatever benefit that we are getting from the Development Bank of Ghana to establish the Women's Bank. And I think in that way, we don't duplicate institutions, we don't duplicate functions, and we avoid institutional conflicts. And this program will take off quickly than expected.
Yeah, and hopefully very soon we hear more about the 24-hour economy policy. Thank you so much, Yaolate, partner, financial advice with Deloitte Ghana. Appreciate that you could speak to us on the marketplace. Enjoy the rest of your day. Well, we're taking a short break. When we come back, Energy Minister has been ruling out load shedding despite incessant power outages. We've got that story at the other side of this break. Thanks for staying with us, everyone. Energy Minister John Jinapor has ruled out load shedding despite incessant power outages in some parts of the country, especially in the Ashanti region. He insists the country generates enough power to meet both domestic and external demands. Though Mr. Jinapor is unable to reveal how much is generated to meet local consumption, he told the Asante the country exports power to Cote d'Ivoire, Burkina Faso, and Togo. Ohim Interior has more.
In recent times, parts of the country have been experiencing intermittent power cuts to the dissatisfaction of consumers, especially businesses. Energy and Green Innovations Minister John Jinapor, during a day's tour of the power enclave in Kumasi, told the Asante Mine Council meeting that Ghana is able to generate enough power to meet local consumption and for exports. The meeting was chaired by the Asante Hene, Otumfo Setutu II.
We are not shedding load. In fact, mankania no yenya kura manabro so kakra. Ama yedibiko Burkina, yedibiko Cote d'Ivoire, yedibiko Togo. Ni akoton enya mfaso kakra di aba. Nti madama problem ni ho. Ni ayehwe distribution no. Nana wadama, we have Bronibeka said we have enough generation to meet demand.
Ashanti region is one of the regions hardest hit by the incessant power outages. There are ongoing power infrastructure projects which include the installation of additional power plants by AXA and Senate Energy to complement the already relocated Ameri power plant. Mr. Jinapor says the completion of the projects will inject more supply points in the Ashanti region to support export of megawatts of power abroad.
I'm happy to announce that so far the supply situation has been stable and we are able to export some excess amount of power. But there's still more work to be done. Beyond generating the power, you have to evacuate it, you have to transmit it, and you have to distribute it. And so we are working around the clock to ensure that we address this challenge and ultimately ensure that we have very, very reliable supply and delivery of power.
The minister, who was in the region to inspect ongoing key power infrastructure projects, including Gridco's newly installed 145 MVA transformer and a new power enclave, was accompanied by the Ashanti Regional Minister, Frank Amoakohene, heads of the Volta River Authority, Electricity Company of Ghana, and the Ghana Grid Company. For Joy Business Report, Oyimenteria reporting.
And that's our program this afternoon. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. There you go, the day's latest stories over there. We're leaving you with today's episode of Money Lab.
Hello, everyone. This is Money Lab once again. Remember, my name is Abna Baini. I'm a partner with Deloitte Ghana. We're picking up from where we left off the last time. Today, we're talking about the users of the financial statements. Who are the users? What's their interest in the financial statements? And how does audit assist them? There are various users. We have shareholders, we have investors, we have people who are interested in what's going on. They're employees of institution. They're all interested in different things. Today, let's focus on the shareholders. They are interested in returns on the investment and the money they've put into the organization. And so the audit helps them to get an independent view of how their money, their investment is being used. We will end it here today. Thank you for joining us. This has been the Money Lab.